Hi guys, welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. Well, it was a day of profit booking, a volatile one at that, given the fact that we were around that 21,000 mark around midday, but then fag and selling dragged the Nifty below that key level, and we shut shop around the 20,900 mark. If you look at the Nifty Bank Index, that also came off from day's high, so 400 points off day's high, and most of the sectoral indices ended the day in the red, led by the Realty pack, which, mind you, lost somewhere around 1.5% or thereabouts. Even the mid and small cap, end of the markets succumbed to profit booking and ended the day in the red. If you look at top sectors, autos, energy, realty, these were among the top drags. So BPCL was one of the top losers on the index. That share also went ex dividend, which is why a steep loss of 4% coming in there. But mind you, yesterday as well, OMCs were under a fair bit of pressure. What didn't do well aside of BPCL were Apollo Hospitals, Sun Pharma, Maruti, Eicher Motors, Coal India. These were some of the losers. On the flip side, you had HDFC Life, which had a tax reprieve in a case with respect to 2008 to 2011. A 232 crore rupee tax demand was kind of overturned, or the tribunal, the service and excise tax tribunal ruled in favor of the company. So that came as a reprieve, and the stock ended higher by about 5% or thereabouts. UltraTech, Bajaj Auto, SBI Life, Axis Bank were some of the other movers. Some of the other stocks that did well today were Hindalco. That stock hit a fresh 52-week high today on the back of a plan to invest 800 crore rupees in a battery foil plant to tap into the EV opportunity. So that stock hitting fresh 52-week high there. Infosys ended the day in the red, given the fact that there has been a top level exit once again. CFO Nilanjan Roy has tendered his resignation. This is I think the third big exit coming in at Infosys, and Morgan Stanley, it has retained its overweight rating on the stock, target price of 1600 rupees per share, but it believes that the resignation may weigh on sentiment for some time going forward. But aside of that, if you look at TCS, that hit a fresh 52-week high, given the fact that the buyback acceptance ratio was better than the previous buybacks at 35%, and the buyback offer saw good demand. It got subscribed 6.5 times the buyback size. Aside of that, if you look at the mid-cap end of the markets, quite a few movers there as well. Mankind Pharma was one, down 3%, given the fact that 8.5% equity changed hands via a block deal. Three large private equity giants may have sold stake. We'll be getting the details in the evening. So that stock will be in focus once again tomorrow morning. Yes Bank seeking buyers for 4,200 crore rupee worth stressed loans. That includes both retail as well as corporate loans. So that stock was up somewhere around 6%. This is of course a report based story. IREDA, the recent listing, that stock breezed past that 100 rupee mark. Mind you, it listed just about 8 sessions before, and this stock is up 200% rather from its IPO price. Today as well, it ended higher by about 20% or thereabouts, locked in upper circuit. Dixon Tech is the other one that hit a fresh 52-week high on the back of a contract from Lenovo. It will be making notebooks as well as laptops under the PLI scheme. BLS International, that stock up 7%, given the fact that it has bagged a contract from the Indian High Commission in Canada, and that boded well for the stock, up 7%. If you look at some of the other Nifty 500 movers, Equitas Bank, BLS International, as I mentioned, Infibeam, Tata Elxsi, Yes Bank, these are some of the top movers on the Nifty 500 index. On the losing end, you had the likes of PI Industries. That stock shed almost 10%. Paytm continues to slide. Prestige Estates and Vedant Fashions among some of the losers from the mid-cap end of the market. But on that note, let me bring on board our guest for today. Joining me is Nirav Chheda, who's the AVP Derivatives and Technical Research at Nirmal Bang. Great to have you on the show, Nirav. First of all, looking at the setup, we saw some bit of profit booking coming in, 20,900, managed to shut shop above that level. But going into tomorrow, do you see more, weakness or sideways movement, or do you think we would resume and these dips will get bought into?
Hi Nikki. Nifty at this point of time. Sorry, hi Nandita. It happens. See, on the derivative front, the data actually is negative. Very importantly, this data per se, even though Nifty future has closed above the 21,000 levels for about a couple of days, In fact, even today. But the PCR 21,000 continued to remain below the one levels. So that was the first sign. Then, secondly, in the last 3-4 days, if you see the chart, there are doji kind of candlestick patterns there at the top. So there are four doji patterns at the top, and now a negative day today. So not looking very good actually from a near-term perspective, where I believe Nifty can come down a little, probably towards that 20,800, 20,850 odd levels in the tomorrow's session most probably. So it might open lower, and probably by day end it would be ready to again move up. But tomorrow looks bad, not that great at this point of time. Even Bank Nifty, for that matter, after a good run up, it is on a consolidation phase where it can probably retest that support level of 46,800 odd. So all in all, probably for tomorrow, it would be better, to book certain positions and wait for some downside. And once that downside comes in, that is when you start to buy again.
All right, looking like there could be some weakness tomorrow as well. But since you mentioned Bank Nifty, want to get in your thoughts on a Canara Bank as to how it's looking vis-a-vis a Bandhan Bank, given the fact that the Nuvama report states that Canara Bank could replace Bandhan Bank on the Nifty Bank index itself.
Yeah, so it's a beautiful pattern actually for Canara Bank. Higher top, higher bottom formation is going on. Also, if you see the derivatives data, it does show longs being built in through the last 3-4 months in this stock. Once the shorts were covered, this stock continues to attract more longs, and it has very importantly broken out above a very important resistance area, which was around that 380 odd zone. So now the next resistance for this stock comes to around 520 odd levels. That is where this stock can go to. So 500, 520 is its eventual target. So one can look to buy this stock even at current levels. The setup is good. The stop loss would be around 425 for longs in this particular stock.
Yes Bank saw some good buying action today, Nirav, 5% up today, and over the last 5 sessions it has gained a good 9%. Do you see more upside here, or would you say it's just news based and could fizzle out going forward?
No, actually, post 2020, this stock has remained in range of about 12 on the downside and about 22 on the upside. It is retesting the upper end, but the volumes, they are saying a different picture. It tells us that probably this time the resistance will be broken out above after a 3-year period, and very likely the stock can now probably move towards the 32-35 odd levels. So I would be a buyer in Yes Bank once 22 is broken. Definitely, I would advise to buy, above that 22 level with a stop loss of 20. The stock can actually run up quite aggressively post that breakout up to that 35 odd levels.
All right, that was about Yes Bank. But what about a BPCL? All these oil marketing firms have seen a phenomenal run up, so to say. But last few sessions, they have come off quite a bit. Do you think these dips will get bought into? Because, most of the brokerages are maintaining a very positive view when it comes to some of these OMCs, the likes of HPCL and BPCL at least. So going forward, do you think buy on dips is the strategy?
Oh, definitely. The chart is beautiful for all the three OMCs. For BPCL, there's a rounding formation. IOC is already broken out above. HPCL has been going from strength to strength. So, I definitely believe, these stocks will continue to move up. I think BPCL had its dividend day today, and that is why it's down. But overall, the pattern is quite good. I believe this stock should be bought at current levels, because it's a long way to go for this stock on the higher end. It can probably test 550, 600 odd levels now in this up move. The volumes are good. Also, very, very importantly, shorts are covered. So a lot of shorts were in the system in the last 2 years, and they've got covered in the last couple of months. So I'm very bullish on these stocks because the next phase that starts for these stocks is long built up, and this can probably go on for the next couple of months. So you're looking at a good positive bias for these stocks, a positive move for the next couple of months. So definitely buy at current levels. Your stop loss for BPCL will be around 425, and you can expect 550 600 to come in. HPCL has already broken out above that 345 350 range, and it is retesting that zone. So probably it's a good level to buy at. It's at 357 odd, so it's a good level to buy this stock. Definitely buy for a target of around 450 455 odd.
All right, that's the strategy on BPCL. Look to buy some of these OMCs rather. But talking about Hindalco, stock hit a fresh 52-week high today. But on the charts, do you think there is more steam left from here?
Yes. A very similar theme for this stock as well, just like the OMCs. This stock did not do much in the last couple of years. There were a lot of shorts, and they have started to now get out of the system. So the stock is now light on open interest. So whenever a stock is light on open interest, what really happens is whenever there is panic, there's not, people don't come to sell. So there's no panic selling that happens. So that's a good thing. So only buying can get the stock higher. And I believe now is the time, this stock will see longs being built into the system, and the stock can move up towards that 600 odd levels. I don't see much downside from current levels for this particular stock. So 505, 500 is a good support area. So, you can look to buy the stock at current levels. 505 should be a stop loss. Slow and steady, this stock should move up towards that 580, 600 zone.
Right, that's the view on Hindalco. But what about the IT pack? Today, of course, Infosys, under pressure on the back of news flow. And TCS, on the other hand, hit a fresh 52-week high. The buyback acceptance ratio has been pretty good, and that was, kind of reflecting in the stock price as well. Infosys, if you look at that stock on a YTD basis, it hasn't participated in the rally at all. But TCS and I think Wipro on a YTD basis have given good returns. So vis-a-vis TCS, how would you look at Infosys right now?
So, there is something playing out in the IT sector as a whole. If you see the overall theme, there is some buying now going on in the last 3-4 months, where slowly but steadily these stocks are moving up. HCL Tech broke out above a very important resistance zone. TCS has broken out above that 3600 odd levels. Infosys also witnessed a breakout, and post that it is above the breakout levels, even though it is down today. But these stocks are actually above their breakout levels, and slowly and steadily they are moving up from a monthly perspective. So I definitely believe IT stocks as a whole should perform quite well. Vis-a-vis TCS, Infosys did not do that well today, but I am very bullish on Infosys as well. It can reach the 1600 odd levels. So look to buy the stock even at current levels. This is just a minor blip. I don't think the stock will come down further from current levels. You can buy with a stop loss of around 1440 for your longs for that target of 1600. Even TCS you can buy for a target of around 3800, 3850. 3600 is a very good support area, so that should be your stop loss.
Right, those are the levels to watch out for on TCS, vis-a-vis and Infosys. But what about a Mankind Pharma? Of course, today the stock came under a fair bit of pressure on the back of the block deal. But even if you look at the 1-month chart, hasn't really gone anywhere. On a 6-month basis, it has given a good 20% returns. But do you think it is poised to recover some of the lost ground going forward, or do you think it could remain sideways or see some more pressure here on?
The way I look at the chart, there's not much of a chart actually, but whatever I can see, I believe if you're holding onto this stock, you should exit positions, because with this block deal, the chart has become negative, and there is a likelihood that this stock can come down towards the 1600, 1650 odd levels. It's around that 1850 odd zone. So a good 200 rupees can it can come down from current levels. So look to exit it probably as it comes down towards 1600. That is where you start buying again. But I don't see it going up so soon at this point.
Right, that's the view then. But what about you talking about recent listings? IREDA. I mean, there's not much to look at by way of charts or history, right? But given the fact that the stock has nearly tripled, since its listing, 100 rupees crossed. So, would you say that one should actually look at booking some profit right now here? Or do you think it could be heading towards 115, 120 kind of levels pretty soon?
Yeah. So see, Nandita, just to say, I can say a lot of things, but again, there's only a 10-day graph that I have at this point. I just don't want to comment on it at this point because there might be a good fundamental basis for such a move, and it would be better if a fundamental analyst, about it. So it'll be better, to consult that person. I just have no opinion at this point.
Right. What about a Paytm? Come off quite significantly from its 52-week highs, and it continues to continues to be in a downward trajectory. Here on, would you say it could retest levels of 500, or would you say that much of the selling is done now and it could perhaps stage a turnaround?
No, I think probably another 40-50 rupees is where this stock can come down to. Very important breakdown happened around that 855, 860 zone, and that was a gap down. I think it was 20% down that day, and this stock has fallen since. I believe if you're holding on to longs. This stock should take good support around that 560, 580 zone, which is where you look to average out position. The overall chart is negative in the near term, but in the longer term basis, I do see volumes appearing in this stock around those 560, 580 zone. So probably, good demand zone will arise from there, and slowly and steadily this stock will come up. However, this stock will take about 3 to 6 months to again come up towards its 800, 850 odd levels. So, do not expect it to have a V-shaped recovery.
All right. I also want to get your thoughts on a PI Industries. The stock plummeted somewhere around 10% today. Do you think now the setup is looking negative here?
Yeah, actually the setup is negative. So this stock has witnessed a double top kind of a formation at around 3900 odd levels, and it has come down since. If this stock breaks down below that 3320 levels, it can be coming down very aggressively. So, your stop loss for long should be around 3320. Once that is broken, just exit the counter because it can then come down towards that 2400, 2500 zone, which can be quite nasty. So, keep that stop loss for longs.
All right, just a couple of more stocks. Dixon Tech, has had a fairly good run. If you look at the monthly charts, even weekly charts for that matter. Today there was a slight dip, but do you think one should utilize these dips to buy into this?
Oh, definitely. This is a 3-yearly breakout from post 2021, or 2-yearly breakout. So definite a breakout and with volume. So last few weeks volumes have been terrific in this stock. So on the lower end also a good buying has happened. So I definitely believe this breakout is here to stay, and it can probably take the stock towards that 7,000 even higher levels. So definitely buy at current levels even on dips. Your breakout came around that 6,000 level, so that becomes your stop loss. Till then, if you get the dips, continue to buy. I don't think it is breaking 6,000 now going forward.
All right, set up for Dixon Tech, of course, a breakout stock. But what about a Shriram Transport? Stock has done, in fact, Shriram Finance, the stock has done well. It is a candidate for inclusion on the Nifty according to Nuvama. Do you think one should look at this stock now? And secondly, UPL is one stock that is poised to exit the Nifty, right? But it has been attempting to make a comeback. So, your thoughts on these two stocks?
Yeah, so just looking at the charts of both these stocks, Shriram Finance has given a 3 yearly breakout above, in fact, a 5 yearly breakout above that 1700 levels, and post that this stock has seen a good run up. I believe this stock still has it in it to move up towards the 2400 2500 zone. So definitely I would be a buyer at current levels as well. A good support area for this particular stock is around that 1950, 1940 zone. So 1940 is the stop loss that you keep and hold longs for that time frame up to the 2400 odd levels. For UPL, it might not be bad to exit the Nifty. Because the overall chart in the last 3 years, it has gone nowhere, and I don't see much buying coming in as well. So probably a fall can help the stock get the buyers, and once that buyers come in, this stock will again gain momentum. But at this point, it doesn't look that great for UPL. Don't see much momentum on the upside. So just exit UPL only once this stock either moves up above the 640 or levels or comes down towards those 500 levels is where a buy call can be initiated, but not at current levels.
What about a BLS International? Fairly good momentum here. Should one chase this momentum, or do you think it's somewhere near the top?
No, so just today it has made an all-time high, and this has been done with volumes. So this stock has come up from 8 rupees in 2020 to about 320 or but continues to have momentum. So anyone looking from a trading perspective, this is a good stock to get into because higher top, higher bottom formation this stock is making. Just now, just today, it has again started the formation of a new top where this can probably go up towards the 350 odd levels. So, and it can go up quite aggressively and fast. So, 350 is your target. Look to buy this stock for those levels. You can keep a stop loss of around 302 for your longs.
Right. One last talk that's on my list today is SpiceJet. It has approved a total fundraise of somewhere around 2,250 crore rupees. Numbers have also come out just a few minutes ago. You've had net loss that has been narrowed on a YOY basis. Revenues are down 27%. In fact, EBITDA loss is also narrowed slightly on a YOY basis. As I said, board has approved fundraise 32 crore shares at an issue price of 50 rupees per share and 13 crore convertible warrants at 50 rupees per warrant, right? But given the fact that the stock has run up quite a bit in the last couple of sessions, what kind of stop losses should one keep now?
Yeah, so I was just looking at the stock, and it's a tremendous pattern actually. Looks like a very big turnaround for this particular stock, and after a long time, this stock has been coming down from 150 odd levels. It came down towards the 25 levels, from 2019 onwards. It made a good low around that 25, 20 odd levels, and from those, volumes have actually picked up. So, the volumes have been double, triple of the average, and many times, 10 times of the average weekly volumes. So, definitely, there is something cooking here. A breakout has been got around that 51, 52 odd band, and a rounding formation breakout has been achieved. So, I believe this stock has it in it to move up toward that 100, 110 odd levels. I don't know what the result reaction would be, but if you get this stock on dips, continue to buy. Your stop loss would be 50. I don't think that is breaking so soon. And 100, 110 is your target.
All right, 100 to 110 on target for a SpiceJet on the upside. But before I let you go, Nirav, any recommendations for viewers for the next couple of sessions or for the rest of the week, and strategy on Nifty Bank given the fact that it's weekly expiry tomorrow?
So, for Nifty Bank, I'm expecting a fall tomorrow. So, it'd be better if the banking index opens up and, you get to buy a put. I do believe Bank Nifty is slated to come down towards that 46,800 odd level. So, buying a 47,000 put would not be a bad option. So keep your stop losses as per your risk profile. But in terms of spot, 47,200 is the resistance zone. If that is broken, that is where you exit your put positions. In terms of the stocks that I like, I really like the fertilizer sector. This is one sector which has done quite tremendously in the last 4 or 5 days, in fact, the last 2 weeks, and big breakouts have been got achieved. So I like RCF. After a span of 10 years, this stock has moved up above 150 odd levels. So whenever such a big breakout comes in, so the stock doesn't move only 10-20%, it actually moves up more than 50% from that breakout. So the stock is just near the breakout. One can keep a stop loss of 152 and look for targets of around 175, 180, which can be achieved quite easily and probably quite fast. The second stock that I really like is Aegis Chem. So this stock overall I really like because it's a V-shaped recovery that it has shown, and post the recovery there is a breakout above the 380 odd zone. I believe this stock is headed towards 425, 430 odd level. So 430 is your target. This stock you can keep a stop loss of around 372 for your longs.
All right, those were the recommendations coming in from Nirav. With that, Nirav, thanks a lot for taking out time and joining in and sharing your thoughts with us. Look forward to connecting with you sometime again, but it was a pleasure chatting with you. Well, with that, we've come to the end of this edition of Closing Bell. Of course, if you have any comments, leave them in the comment section below, and of course, come back and join in at 8:30 a.m. tomorrow morning with the setup for the markets as well as stocks that will be in focus. In tomorrow's trading session. But it's a goodbye from me. Thanks a lot for tuning in. You have a great evening and stay tuned to Moneycontrol for all your other news and updates.